Hello friends, today we are going to discuss the expected global economic outlook for quarter 1 of 2024. First one, US will continue to outperform Europe. Second, while China's policy induced recovery is set to continue in the near term, strong structural headwinds will put the economy back on weaker track by the second half of the 2024. Central banks, third one, central banks should be able to cut interest rates back to more neutral levels. Fourth one, the big fall in commodity prices and shipping costs and the unwinding of bottlenecks in global supply chains that prevent fall in manufacturing in 2023 are now in the rear view mirror. Manufacturers are left heading into 2024 with new orders continuing to contract, but with no new help on the supply side to prevent fall in the production. Fifth one, consequently, the outlook for consumer demand will hinge more on income growth, which we expect to slow. All else equal, lower inflation should help boost income growth in real terms. But going by the trend decline in the job vacancies and softening of hiring intentions, employment growth is likely to continue to weaken in the quarters ahead. And with labor markets loosening, nominal average income growth should ease too. Sixth one, below trend growth, cooling labor markets, and a pipeline of falling goods price pressure will see core inflation drop close to 2% by the second half of the 2024. Now we see the economy-wise economic forecasts for 2024 first quarter. Now we'll first see the United States. The lagged impact of previous monetary policy tightening should push GDP growth well below potential in the coming quarters. This should help bring core inflation back to target by mid 2024, prompting the Fed to cut rates by more than investors anticipate starting in March. Europe. We expect the Eurozone economy to broadly stagnate over the first half of the 2024. And as core inflation continues to fall back towards target, we expect the European Central Bank to pivot to rate cuts as soon as April. Japan. Economic activity looks set to slow in 2024, but early signs that wage growth will rise should convince the Bank of Japan to raise rates out of negative territory and formally end yield curve control next year. UK. We still think the UK will experience a mild recession, but lingering restraint on supply will keep core inflation higher than elsewhere, preventing the Bank of England from cutting policy rates until late 2024. Canada. Weak GDP growth and further falling inflation will prompt the Bank of Canada to cut rates early next year. Australia and New Zealand. We think that both economies will narrowly avoid any recession. China. The step up policy support and an uptick in the consumer spending should continue to drive a modest cyclical recovery at the start of 2024. But various structural headwinds mean the recovery won't be sustained. India. Growth will remain strong ahead of next year's election, and the RBI won't cut rates until second half of 2024. Other emerging Asia. Weak global demand will weigh on GDP growth across the region in the near term. Now, if you see the commodity level in the quarter one of the 2024, we can see that while we expect most commodity prices to rise, oil prices should buck the trend as a gradual unwind of voluntary production cuts by the OPEC. That's the end of our discussion. Thank you. Thank you so much.